following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I hope everyone can hear me. Had a little bit of a technical problem this morning. Hope everybody's doing well. I got to tell you, I was watching something about the Lamborghini the other day and the stats on that. This was blowing my mind when you kind of put all this together. I think it was like a $290,000 car, but they had, they obviously have more expensive cars. And the more expensive cars, I looked into the stats, it's like 0 to 60 and blah, 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 and horsepower, blah. Have you guys looked into that Dodge Hellcat situation? My God, you can spend 60 grand and get a 700 horsepower car now that goes 0 to 60 in like 3 seconds or something like that. And I was just wondering how or why are the BMWs and the Mercedes that try to compete on that level, or even the Porsches. That's a heck of a deal. Ooh, blew me away. All right, let's take a look at the S&Ps immediately. Got to get a Hellcat. Let's take a look at the S&Ps. All right. We showed some cracks in the armor. This is going to be a little bit of a little easy talk for me, actually, because we started showing some cracks in the armor here. We started looking at some of the statistics the other day, and these, as the market rose, these belows actually started increasing. They came off a little bit when the market bounced around a little bit higher the other day, but these numbers, this 94, and again, we haven't crossed, as you can see, this dial up here hasn't crossed over. And that means that we're still breadth positive, but we're starting to see some things that lend to, we may at least, come off all-time highs, a smidget here, and come back into some daily support, which we talked about, 2084. We always talk about stops, and we always talk about letting the long-term, the weekly above profiles in this case. I'll pull that up. Since we're looking at the long-term trend up, very long-term trend, we kind of look at the dailies as the regulator. We haven't explored this fair auction at all here. 2084 is going to be the testing area for the S&Ps. And if we look at this breadth, while we're looking at the S&Ps move around in this fair auction on our daily, we're going to keep an eye on this particular dial right here. And we're going to pay attention if this starts crossing negative and the weekly starts showing some cracks. We're going to probably take a look at passing on that 2084 as a buy point. So, all that being said, what do you do right now? We've got some cracks in the armor. 60s, 240s just started happening the other day, but we looked at the reality of the dailies on the breadth to kind of look at the numbers. We're almost getting into 100 crossing over this morning. Obviously, we're down a little bit from yesterday's close, and again, these are all-time highs here. So, it seems like if the S&Ps pull back, these guys on TV, they kill me. These guys on TV think this is the buy the dipper area already. Sit tight. Let's kind of wait until we get to 2084 to make any serious decisions and any breakthroughs about is the technical damage starting to happen for the longs. But right now, going down the line, I'm going to kind of look at my 240s and see that on the short term, I think now at this stage, we've got 2100 to kind of look at as a fence for a relaxing kind of drift down against the long-term trend up mode that may allow us to get into that 2084. And again, it's very, very difficult. I've got some guys who do 50,000 round turns a month trading futures, S&P futures, minis, and they're always trying to trade from the short side. They've had these guys are good. They make money. They know how to put in stops. A lot of their MOs for trading S&Ps, believe it or not, if they make 6 ticks, they're out. If they lose 2 ticks, they're out. And I personally can't sit in front of a machine and get tortured all day with that kind of deal. But using some of the things that we talk about every day at least gives them some battle points to start looking at, waiting patiently, i.e. these 240s right there, some of these areas of significance down below. This is our 240 again. So right now, this is kind of neat that this is happening, and we've kind of rattled around here at this 2100 area. Now it looks like we may, all things considered that we just spoke about, possibly drift down. Remember though, long-term trend is up. Breadth on the long term is still positive. Excuse me. And we have never, seems like this show causes me to get a sore throat. We have never really retested the 2071-72 area. So we talked about that a while back. I still feel like that at least has to happen. So that's the take on the S&Ps here. All right. We're going to just hit the treasuries really, really quick. We're going to look at the 10-year. We're going to look at June. And here we go. So here's the June contract at 127.11, big number. 126.18, that's the weekly. 126.18, sitting down here. This is a little bit of a DMZ. It's a pretty wide one. Again, I'm still, we got a big, massive jobs report you got to pay attention to this Friday. You're going to get some indications tomorrow on Thursday. I'm still a big fan of buying the dip on treasuries. That's all I'm going to say there. And those are the inflection points. They're given to you pretty much straight up in the scanner to pay attention to. All right, let's just drift into some of the things we always take a look at as a barometer of what might be moving broad markets. And then we're going to get into some individual stocks again. And taking a look at the euro. Again, this is kind of, I hate to be so boring about this, but it's not on sale. It is not on sale. I hear you, Jay. There's a ton. How do you really go whole hog into numbers, by the way, just based on what Jay just said in the den? How do you go whole hog on the numbers that the U.S. government comes out with when they adjust them, from the previous month adjustments, blah, blah, blah? And is that really showing the true employment rate? As you guys know, it is not. But the markets want some things to trigger off of, and there's that on the euro again, by the way. Just wanted to point this out. This is a really good primer in the logic here, is closing below, going back and retesting those unfair lows on the weekly to give you another inflection point to pay attention to. But how do you really gauge what the economy is doing by those numbers, which are skewed, in my opinion? Even if they're not lies, they're skewed. We're going to take a look at the yen really quick. And here's the daily situation that we talked about on the Japanese yen. And we're still hanging in there. And I still love this trade. I love this trade with stops. 119.44. Not a bad trade there, in my opinion. Relatively high probability. Okay. That's some of the usual things we talk about. Let's just kind of move right into the DAX, because we've had some action here. We've had some pullback, and we got a new box to pay attention to finally. So on the DAX, this is kind of what we were waiting for, considering that the euro is getting pounded again. This is your area to concern yourself with on the DAX if you guys are trading this wild, crazy instrument. And we're going to go in here, and we're going to go down to the DAX. And we're going to see that now we've got that new inflection point 11,264. All systems still go. There we go. There's that inflection point. That's your new fence. I know we kind of cratered into that this morning. That's what stops are for, if you guys were paying attention to the scanner as this was available. But that's the new fence. Got to pay attention to it, and don't see a lot of reasons that this thing will come off, especially with the euro getting hammered again. Yeah, that's another thing about rates is, I mean, it's that's a long conversation we'll get into after the next break. We're going to take a look at the Shanghai one more time here, because this is a situation that, you know, we closed above, we rattled around up here. We're coming back and consolidating still above 32.29. We had that Chinese quarter point rate cut out of the blue. I still think that's a good area to put stops below to trade this from the long side. Just go with the flow on this one. We've talked about staying away from gold. I don't see a lot of leverage here. 1,200 is a big number. Obviously, it's a psychological number, but we came off that 1222. I talked about we had to have a close above. That didn't happen, and that was an area to kind of have some battles around, if you will, if you notice that. And we're going to take a look at soybeans before we go to break here, and we're going to take a look at the contract that we want to. Actually, let's come back to that right after the break. That's going to be a little bit of a conversation, and we got to jump into crude oil. So, crude oil, again, I'm you know, there's a ton of articles out there on crude oil. I mean, you could just read all day long, and I think the summation of those readings, you're probably going to feel that the fundamentalists are all on the, not all, but for the most part on the short side. I love it. I love to hear that. I like the technicals here, and I like 50 as the fence right now. And you're probably going to get stopped out if you set these relatively tight. But again, I feel like crude oil could actually make another run up, and that's just my stance on it. And you haven't heard me waver too much from that. Here's the XLE. Here's the daily, and we're kind of closing below, coming back. We need now a close back above 78, 76 on an intermediate time frame to really start pressing the gas pedal on this. But you've got some really good situations still on the internals of the XLE, and you can find those on the scanner and find some leverage points for that. We're going to head to break. And if you don't remember our phone numbers, I'll give you those right when we come back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Looking at November beans, thankfully. 975 a bushel still is a big deal down there. That's the pressure point for the buys, and we actually have kind of reversed on the weekly below this 989. So we're kind of in a bounce around state, in my opinion, and we've got to wait on the short side now because there's nothing to lean off of here, getting below 975 a bushel for shorts. But you've got to, this is kind of directionless, in my opinion, right now. So you've got to, kind of wait for breakouts above 989 or closes below 975. That's the deal on beans. I want to go back to the S&Ps for a second because this is something that we're trading 20.99.50 right now, and that's that former unfair high. But in situations like this, there's this is not some new idea, but if you want to, this is something to think about. I'm not telling you to do this, but if you feel like we're going to have a big move one way or the other on the indices or the treasuries or whatever, there's a cool way to really look at these and try to weather out some storms on the long side or the short side. And what we have done traditionally internally, me and the guys that are on my team, when you look at these things, you get to inflection points, and let's just say right now, I don't know if we're expecting a big move down at all, and we could do a moonshot based on the unemployment report, and that anything can happen. But as you look at these and you want to try to stay in a trade or take a stance on something, and instead of suffering the underlying volatility you want to trade lighter if you're going to take a long-term stance. You don't want to be taken out in the body bag by getting too heavy. But what we have done traditionally is if we say, okay, we've got some indicators on the long term that are starting to roll over, we may have a move that we can take advantage of, but we don't want to get shaken out of that trade constantly. We've gone in this case, shorted futures and bought in the money calls. Now, what does that do? That kind of you have to have a little bit larger move to really take full advantage of that. And so in this case, I'm just going to pick a point here. If we bought the 2084 calls and we're shorting the futures right now, that means that with the VIX, the VIX kind of rattled up a little bit lately, but you're basically putting on a hedge that you're not paying as much insurance for on the outright. So, if we go in and short the futures, let's say 2100 or whatever it's at right now, bought the in the money calls, so we're buying 16 points in the money. But if you take a look at that, just put that on your screen, and if the futures plow straight up, you're going to see that you're going to be pretty much tick for tick on the hedge. And obviously if we go to 2200, that's going to evaporate everything except intrinsic value in the hedge. But if we fall apart in that type of scenario, what's going to happen? The VIX is going to go up. The calls are going to hold their value, not all of their value, but they're going to start, increasing in value, except for the intrinsic value, the time and the volatility component of it. And the futures really have unlimited upside potential. And as you kind of meet some of these inflection points, in this case, this is pretty tight, but you can actually look at this as, getting rid of the spread altogether. It did its job. You didn't pay a lot for insurance in case it didn't work out, and then start readjusting that. So for instance, if we do come in, we start really coming apart at the seams on the S&Ps, you can either ratchet down the calls or start selling puts against that and turn it really into something kind of cool as far as controlling risk and actually dealing and locking in some of the profits. So take a look at something like that. It's just, it's a different way to look at these things rather than kind of getting stopped out with the noise. And maybe we'll construct that for you and show you that tomorrow. So just wanted to point that out because a lot of guys, especially my friends down in Orlando, are just getting stopped out of shorts constantly. We're going to go to break and we're going to come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we're gonna, if you guys have access to this, I really want you to pay attention to these breaths after the market opens, after the stocks. Most of them get open right after the 9:30 time frame. We're looking at the XLK, but I want to get back to the XLF really quick. And since we've got this impending moment Friday morning coming up, there's going to obviously be some people concerned about that. And in my opinion, we talk a lot about not being in the market right, in the middle of these announcements, kind of waiting for them to come out from a risk standpoint. This 2054 area, or excuse me, 2451 combined with this weekly situation. I know that this is kind of a classical, compress into these profiles up top, and it's been happening. But I'm not a big fan of buying the XLF, and I'm a big fan of using this to orient stops around on the short side. But do you gamble before that announcement and let the treasuries kind of dictate how a lot of these financials are going to react? I don't see a lot of upside in being long these things right now, is what I'm trying to say, especially before this announcement. So that's my take on the XLF. That being said, I'm going to meet with a guy, I think tomorrow night in New York. That's the head of their investment banking at JP Morgan. He was going to actually take a look at our stuff, and we were going to talk about doing some things for the firm. But, JP Morgan, one of the leaders of the pack, obviously been showing some strength. Maximum buy points on that 60.49 up into 61.56. So that's kind of a collection area for that. If you're going to want to look at some of the stocks that are showing some strength within that sector, if somebody's going to put a gun to your head and you got to buy some of them, that's not a bad one. But my take on the whole group is I'm not that rosy about that situation with the banking stocks right now. We're going to take a look at Target. Had some pretty violent movement lately. I guess they're going to fire a ton of people, which I guess is going to be saving them some money, the way the stock's actions taking it. 75.63. Where do we go from here? Here's the ultra long term. 75.73. That's where you can orient stops around. It looks like this thing may drift a little bit higher, but again, if you're looking to kind of buy the breakout, the action here, remember that the broad market could shift this one way or the other. So we're kind of waiting and seeing on Friday. We're also going to take a look at Facebook. I always have a lot of emails about this stock. Here's the long-term inflection point here. We kind of over time, back in October, December, February, market's been drifting a little bit higher. This doesn't have a ton of market relevance. It's got a heck of a lot of social media driven relevance. People asking, what do we do with this thing? I think you've got better longs available to you right now. And, Facebook is hanging in there. Obviously, stops can be placed below, on this type of trade, below that 77 into 79 area. It is holding up very well, but somebody was asking me about that, or actually quite a few people were asking me about that. I don't have a ton of, it's not a, very actionable stock. It's more of an investor type stock. So it's, that's my take on Facebook. Apple. This is the second most popular email. You can't argue with what they're doing or the cash that they have. Do I think it's a short? No. Stops can be placed below 127 on this easily with a little bit of noise there. I think this is kind of a continuation pattern. If nothing else, you've got a new profile here. It's not wanting to breach anything, and stops below 127 is kind of, again, to sum that up, I don't think it's a short, put it that way. We're going to take a look at Tesla. And here's a long-term view, 193.70. That's held a couple of times. That's where you got to place stops below there. I think any market downturn is going to drag this down, so be prepared for that. Here's the daily, that weekly inflection point, 193.70. A big deal. Numbers here to call in, 877-927-6648, internationally 727-445-1044. Did you guys hear about those people scalping the dead tickets for 15 grand? I heard about that recently. I'm like, who in the world would pay $15,000? I was going to say to see a bunch of guys in wheelchairs, but I mean, hey, it's the Grateful Dead, or what's left of them. 15 grand. Amazing. We're going to take a look at the dollar really quick. Yeah. Are you serious? Some people are paying over 100 grand for the dead tickets. I haven't heard that one. Ooh, that's amazing. Let's take a look at the dollar really quick. All right, so here's the daily on the dollar. Here's the recent highs. Haven't gotten there yet, but that's probably a foregone conclusion. Just got a comment in the in the room here. I have a friend he's a huge trader, but he also is involved with some. Let's just put it out there. He's involved with some medical marijuana companies that are obviously penny stock related type things. And when I saw that 100,000 is a lot of weed in the den there, they asked him if they could pay him for some of the promotion in weed. I thought that was hilarious. And he was like, should I do this? I was like, what are you supposed to do? Take the marijuana and sell it on the black market? I mean, how does that work out? So it was but he was actually asking me, should he do that? And I was like, I don't think so. I don't think you should store illegally anywhere medical marijuana weed from Colorado. That was it was very weird that he was actually even considering it. I was like, I don't know if that's the right thing to do. We're going to take a look at IBM really quick. All right, here we go. Rattling around at this 160.26. I get a lot of emails about this too. Is this a buy? No, it's not a buy. This is a sell, in my opinion, with stops above the maximum threshold for pain's got to be above 164.5 now, but I think you could safely put stops above this 163 area. I just hope the market can give this thing some help and turn south and turn this into another good short. Take another look at stock that's actually started to show some strength here recently, BlackBerry. But we got into this area right here. This was our target before when we were talking about this around 1137. Not a lot of, this is kind of stock too. It's cheap enough to where you say, I could buy 5, 10,000, 20,000 shares of this and trade it, and it's going to stay in a range. Well, these things have a tendency to, especially, the short amounts that are in this stock, to move violently. So again, you got to watch out shorting against these inflection points. That's basically what I wanted to tell somebody who was asking about it. Is this is kind of an investor stock, if nothing else. It's not really a tradable stock, in my opinion, but this is kind of how we've looked at it. When we got that pullback into 10, we started talking about this possibly reaching that 1137 area. That's been met, and the kind of show's over for a while in BlackBerry, in my opinion. We're gonna take a look at Amazon really, oh God, if I could ever spell that right. Amazon, there we go. Stop still below 370.85, nothing new there. And we're gonna go into something we haven't looked at in a while, ExxonMobil, relative to what we're talking about in the XLE. 86.95, stops below there. We kind of had to wait till we got back down into some inflection points. We met some targets on this, 93.35 up top, as you can see, a couple of weeks ago. But what do you do now? 86.95, that's coupled with 86.72. This is really now not looking good to me. It's showing some relative weakness towards the group altogether in the XLE. So the bottom line is if you got to buy this thing, 86.50, 86.75, got to put stops below there, and you got to pay attention to what's going on with crude oil in the XLE. And I think you've got better candidates to get long. But remember, ExxonMobil has provided some very good trading opportunities. But right now, it's a very big component in a couple indices, and this thing's don't like the way it's sitting on the lows again practically. Somebody was asking about international paper. I just want to take a look at this. 55.13, again, put stops below there. We're sitting around, rattling around in a profile up here. This is our daily. This is not the day trading stock of all times, by the way, but as from an investor standpoint, I think that's kind of where you got to look at this thing possibly breaking down. Unfair high is 57.53 on international paper. We're going to take a look at our breadth again before we start talking about some other things. Again, as these stocks continue to open, we're going to start seeing some more figures. Keep your eye on this daily breadth situation. And again, if you missed the beginning of the show, we were talking about that 2084 area on the S&Ps. I actually think that's going to be satisfied, maybe not today, but over the next couple of days, especially before this report. And before this, this is considering that by Friday morning we may be down here, and we've got to take a look at the breadth. And those numbers, there's a lot of good news baked in the cake. If we have any disturbance, we could actually start breaking down below 2084. But again, keeping your eye on that and sitting on the sidelines during the report might not be a bad idea. Just wait for somebody else to throw the dice. Okay. We're going to take a look at UTX. All right, some guys are asking about this. Again, stops below. This is a very good support area at 120.36. Stops below there. I think we could reach a little bit higher on UTX. I'm going to go into the scanner really quick. I'm going to go in here and select none. I'm going to pull up the S&Ps and the 500 internals. And we're going to do a little bit of a filter here. We're going to find out again what's sitting on the bottom of the box on our daily and weekly. Okay. So out of 500 stocks, this is kind of what's happening now on three particular stocks: Yahoo, NRG, and Lowe's. All right. So we're going to look at Yahoo, NRG, and Lowe's. There we go. This, in my opinion, we start gravitating down below that 42.62 area, which is coupled with that 42.81. This is a short, folks. Stops above that area, this thing could drift down. Any market help would obviously drag this thing also into a very bad situation. Let's take a look at Lowe's Corp. These are stocks that are obviously not cooperating with the latest moves up, showing their hand. We're going to cover this a little bit more when we come back from break, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I've got Palladium up, and I've got a continuous contract for Palladium up. We could show the March and the June contracts, but I was just going to kind of hit on the continuous here for a bit. 820 unfair highs. This is our daily. Looks like, we've had a breakout, come back and test. Stops below 820 is the way I'm looking at this. I like this because, as we kind of break out, we're also kind of coincidentally having Navigator get above zero at the same time. And on our weekly, that has been a very confluent kind of inflection point around 820, 823, and we've kind of rattled around up here, and a weekly closer will be just completely awesome. But I already like this as a long, and I know we've missed a pretty good move from 776, but again, stops oriented around here, you really can't ask for more. Thanks for putting that on the radar screen. Actually, is it a short? No. The only way we'd look at this as a short is if we got a weekly close back down below 820, and then could use that to our advantage. But again, I think I'm looking at this from the long side. All right, let's kind of recap here. Let's go back to the NASDAQ. We've talked about some individual instruments. Again, that retracement area, I know this is extremely bullish when this happens. Profiles below price action. This is the NASDAQ. Does this deserve to go down to 4,400? we're more than likely, when these profiles appear like this, even if they're below at some point, they could, be almost acting like a magnet. And I feel that with what's going on in the marketplace, some precarious things going on with the Bretts, starting to show some hints of cracking. 4,400 may be your target on the downside, and maybe even 4,364. But again, I don't think the leverage is to continue to go long right now. Okay, Palladium from 839. Let me relook at that. Well, I'll tell you what, we'll look at it tomorrow. Just remind me. Just want to recap a couple of things. Sorry, where the heck was I here? Okay, just to recap the S&Ps. I'm looking for some kind of pullback into 2084. And I know we had a little bit of a downturn yesterday. It's like the world's coming to an end by listening to these TV guys that we actually went down for a day. But, some cracks in the armor. 2084 is going to be the targets. And where do you put stops? I think you just put stops above 2100 based on the appetite for risk at this stage. That 2099 area is going to be still remembered in everyone's mind. Get this in the March here. Hold on 2 seconds. We're going to take a look at our VIX here. That's where we're at. Going to have a new profile appearing. If you're trading VIX futures, that's kind of what we're waiting for. We're just going to have to wait and see on the VIX. Had a couple of questions about that. And we're going to finish up with the dollar. Got about 15 seconds. I think all systems are go here. I don't like the concept of shorting against this inflection point up here. Things on their highs go higher. I would ignore this, wait for a close. I think we could still move higher on the dollar. Guys, you've been great. Steve Rhodes is next. Hit me with emails if you want something looked at. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.